Here's the belief almost every retiree in America is holding on to right now. You believe your costs in retirement are basically fixed. You believe that once your Social Security is set, once your Medicare is enrolled, once your property tax bill shows up every year, the numbers are the numbers, and all you can really do is tighten your belt and absorb whatever the government sends you. That belief is false. Not partly false, not mostly false, flat out false. And in 2026, that specific belief is quietly costing American homeowners and retirees over $60,000 they were fully entitled to keep. Your costs did just go up this year. That part is real. But the amount you actually pay is not fixed at all. And the people who understand that are keeping money, the rest are handing away without a fight. Let me be specific, because vague scares people and specific empowers them. In 2026, the standard Medicare Part B premium climbed to $202.90 a month. That is up $17.90 from $185 in 2025. That is close to a 10% jump in a single year, and your Social Security cost of living adjustment for 2026 was only 2.8%. Read that gap out loud in your head. Your check went up 2.8%. One of your biggest fixed costs went up almost 10%. The math is not in your favor, and nobody in a government office is going to knock on your door to fix it for you. So the myth is not just wrong. The myth is expensive. And today we are going to tear it down layer by layer, because underneath the first lie there is a second one, and underneath that one there is a third that almost nobody catches. So who benefits from you believing your costs are fixed? Follow the incentives, because the incentives tell the whole story. Every single one of these cost programs, the property tax relief, the Medicare premium help, the prescription drug assistance, works the exact same way. The government sets up a program, the government funds the program, and then the government waits for you to apply. It does not enroll you automatically. It does not send you a letter that says, "Congratulations, you qualify, here is your money." The default setting on every one of these programs is you get nothing unless you raise your hand and ask. And the agencies know that most people never raise their hand, which means the money stays in the system. Here is the sentence I want you to tattoo on your brain for the rest of this video. Eligibility is not the same thing as receiving. You can be 100% eligible for a program that would cut hundreds of dollars off your monthly costs and still receive exactly zero, because eligibility only turns into money the moment you file the form. Nobody profits when you stay quiet more than a system that budgeted for money it is betting you will never claim. That is not a conspiracy. It is just how these programs are built. They are opt-in, not opt-out, and the belief that your costs are fixed is the single most profitable belief the system could possibly want you to hold. Every year you believe it is another year, the money you were owed stays exactly where it is. Which brings me to why I am the person telling you this. My name is Emma Smith, and I am a state bar licensed estate attorney with more than 15 years of sitting across the table from families exactly like yours. I have read the fine print on these programs that most people never even know exists. I have watched a widow in a paid-off house nearly lose it over a property tax bill she could have cut in half with one application. I have watched a couple pay a Medicare surcharge for 2 straight years that they never actually owed. So when I tell you the myth is false, I am not guessing. I have seen the paperwork on both sides. I have seen what happens to the people who file and what happens to the people who do not. And the gap between those two groups is not luck. It is information. And here is my promise to you, the kind of disclosure I think you deserve before you trust a word I say. I do not make a dime from anything I am about to tell you. I am not selling you an insurance product. I am not signing you up for anything. I am not getting a commission if you apply for one of these programs. There is no catch hiding at the end of this video. Everything I am walking you through today is a program that already exists, funded with money that is already set aside, that you can apply for yourself for free through an official government office. Now, before you talk yourself out of this, let me kill the excuse I already hear you forming in your head. Because I know exactly what you are about to think, and I need to stop you before you do. You are about to think, Emma, this is nice, but it is not for me. People with too much money always assume these programs are only for the truly poor. People with very little always assume there is some hidden trap, or that they will get in trouble for asking. Both of those assumptions are the myth wearing a different mask, and both of them are wrong. Let me take the higher income folks first. If you think you earn too much to benefit from anything in this video, I want you to hear the Medicare surcharge numbers, because they are aimed directly at you. In 2026, if your income crosses $109,000 as a single filer or $218,000 as a couple, you start paying an income-related surcharge on top of your Part B premium. That surcharge ranges from over $1,000 a year to nearly $7,000 a year per person. So the higher your income, the more one of these moves is worth to you, not less. Now for the folks on the other end, the ones living carefully on a modest fixed income. You are the people these programs were literally designed for, and you are also the group most likely to talk yourself out of applying because you are afraid of doing something wrong. So let me say this clearly. Applying for a benefit you qualify for is not asking for a handout, and it is not going to get you in trouble. It is not welfare in the way you were taught to be ashamed of. This is money you already paid into over decades of work, being returned to you the way the law intended. Whether your income is high enough to trigger surcharges or low enough to unlock full assistance, there is a layer of this myth that is costing you personally. Nobody gets to sit this one out. And that is layer 1. Layer 2 is where it gets worse. Layer 2 of the myth is the belief that your Medicare premium is a fixed number handed down from on high. Here is the deeper truth. That surcharge I just mentioned, the income-related monthly adjustment amount, is calculated using your tax return from 2 years ago. Read that again slowly. In 2026, the surcharge you are paying is based on your income from 2024. So think about what that means for anyone who retired recently. If you were still working and earning a full salary in 2024, and then you retired in 2025 or 2026, the government is charging you a surcharge based on income you no longer have. You are being billed as if you are still working when you are not. And here is the part almost nobody catches. You are allowed to fight it. There is a specific form for exactly this situation. It is called Form SSA 44. The Medicare Income-Related Monthly Adjustment Amount Life-Changing Event Form. If you have had a qualifying life-changing event, and retirement or work stoppage is right there on the list, along with marriage, divorce, the death of a spouse, and loss of a pension, you file that form with the Social Security Administration and ask them to recalculate your surcharge using your current, lower income instead of your 2-year-old income. I have seen this single form save people thousands of dollars a year. One form, filed once, that undoes a charge you never actually owed. And yet most people just pay the surcharge quietly because they believe the number is fixed. It is not. That is layer 2. Layer 3 is one I promise you have never heard framed this way. Layer 3 is the belief that once you are enrolled in Medicare, you simply pay whatever the premium is, full stop. The deeper truth is that there is an entire set of programs whose specific job is to pay that premium for you, and the people who run them are not going out of their way to tell you they exist. They are called Medicare Savings Programs, and they are run through your state Medicaid office, not through Medicare itself, which is exactly why so many people never hear about them. In 2026, if you are a single person with a monthly income at or below roughly $1,350 and resources under about $9,950, you may qualify to have your entire Part B premium paid for you. For a married couple, that income figure is around $1,824 a month, with resources under about $14,910.
Let me put a real number on what that means. If a Medicare savings program pays your Part B premium, that is $202.90 a month back in your pocket. Multiply that out. That is $2,434.80 a year, every single year for as long as you qualify. And here's a detail that trips up almost everyone. The income limits for these programs vary by state, and several states have raised their limits or removed the resource test entirely, which means people who assumed they earned too much a few years ago may qualify today and not even know it. Alaska and Hawaii have higher limits than the rest of the country. States like New York have set their own more generous thresholds, so do not disqualify yourself from your armchair. You call your state Medicaid office or your local state health insurance assistance program, the SHIP office, and you ask them to screen you. That is layer 3. But the myth goes deeper than that. Underneath it is a fourth lie hiding in your medicine cabinet. Layer 4 is the belief that your prescription drug costs are just going to keep climbing forever, and there is nothing you can do but ration your pills or skip doses. I want to be very direct here because this is one where the myth actually gets people hurt. In 2026, two things changed that you need to know about. First, there is now a hard cap on what you can pay out of pocket for covered prescription drugs under Medicare Part D. That cap is $2,100 for the year. Once you hit it, you pay nothing more for your covered drugs for the rest of the calendar year. That is up slightly from the $2,000 cap in 2025, but the point stands. There is a ceiling now. Your drug costs are no longer bottomless. The second change, and this is the one nobody talks about, is a program called Extra Help, also known as the Low-Income Subsidy. This program helps pay your Part D premiums, your deductible, and your copays. And in 2026, the income limits are more generous than most people assume. If your annual income is up to 150% of the federal poverty level, which works out to roughly $2,015 a month for a single person, or about $2,726 a month for a couple, you may qualify. The government estimates this can be worth up to around $2,500 a year in savings. And there is a critical detail. The maximum Part D deductible in 2026 rose to $615, up from $590 in 2025. Extra Help can wipe that out. You apply directly through the Social Security Administration for free, either online, by phone, or at your local office. That is Layer 4. And now we reach the one that quietly costs homeowners the most. Layer 5 is the belief that your property tax bill is simply what it is, and that all you can do is pay it or lose your home. This is the belief I have watched cost people the most, because a property tax bill can quietly grow year after year until it swallows a retiree living on a fixed income, and the whole time there was relief sitting on a shelf they never reached for. Almost every state in the country offers some form of senior property tax exemption, a homestead exemption, or a property tax deferral for people 65 and older. And the numbers are not small. Let me give you real, current examples so you understand the scale of what we are talking about. In Florida, for the 2026 exemption year, several counties offer a limited income senior exemption, where the household income limit is $38,686, based on your prior year adjusted gross income, and the application deadline is March 1st. In Georgia, there is a senior exemption for homeowners 65 and up, with income at or below that same $38,686 figure. And the state also has a school tax exemption that can, in some counties, wipe out the school portion of your bill entirely, with a federal maximum reference figure north of $126,000 in home value covered. In Texas, homeowners over 65 get an additional homestead exemption on top of the standard one, plus a tax ceiling that freezes their school taxes so they cannot rise. Same age, same house, different state, wildly different rules, and in every single case you have to apply. And for the homeowners who are asset-rich but cash-poor, meaning you own your home but money is tight month to month, there is a second tool most people have never heard of. It is called a property tax deferral. States like Oregon, Minnesota, California, and Colorado let qualifying seniors postpone paying their property taxes, with the state essentially covering them and recovering the money later from the estate. In Oregon, the 2026 household income limit for the deferral program is $70,000. In Minnesota, you apply by November 1st to defer the following year, and once accepted, you do not have to reapply every year. Picture two neighbors on the same street. One pays her full property tax bill out of a shrinking savings account and lies awake worrying. The other filed one deferral application and sleeps fine. Same house, same income. One knew the myth was false. That is Layer 5. Now let me tie the whole thing together, because the layers are worse when you stack them. I want to stop and say the quiet part out loud one more time, because this is the beating heart of everything. Not one of these 5 programs will find you. Not the surcharge appeal, not the Medicare savings program, not Extra Help, not the senior exemption, not the deferral. Every one of them requires you, personally, to raise your hand. You could be sitting on all 5 right now, fully eligible for every single one, and receiving nothing from any of them. Because eligibility only becomes money the day you file. Read that again. Eligibility only becomes money the day you file. The myth that your costs are fixed survives precisely because it keeps your hand down. And the moment you understand that, you stop being a person things happen to, and you start being a person who makes things happen. So let us do the math on what the truth actually means for your money this year. Let me stack these up so you can see the real number. If you file Form SSA 44 and successfully remove a surcharge you no longer owe because you retired, depending on your bracket, you could save anywhere from over $1,000 to nearly $7,000 a year. If you qualify for a Medicare savings program that pays your Part B premium, that is $2,434.80 a year. If you qualify for extra help on your prescriptions, that is potentially up to around $2,500 a year. And a senior property tax exemption or deferral can easily be worth another $1,000 to $3,000 a year. And in some Georgia counties with a full school tax exemption, dramatically more. Add even a few of those together, and you are looking at somewhere between $6,000 and over $12,000 a year. Real money, sitting on the table for a household that qualifies. Now hold that against the thing we started with. Your Medicare Part B premium went up about $215 for the year. Your Part A hospital deductible rose to $1,736, up $60. Your Part B deductible is $283. The system raised your costs by a few $100s this year and is quietly counting on you to never claim the several $1,000s you were owed. That is the entire game. They nudge your costs up in plain sight and hope you never notice the far larger relief you left unclaimed. Once you see it, you cannot unsee it. So let us turn all of this into action you can actually take this week. Here is exactly what to do in the order I would do it if you were sitting in my office right now. Step 1. Before you touch anything else, pull 2 documents: your most recent Social Security benefit statement and your most recent federal tax return. Almost every one of these programs is going to ask you for income information, and having those 2 documents in front of you turns a frustrating afternoon into a smooth one. Step 2. If you retired or had your income drop after 2024, download Form SSA 44 from the Social Security Administration website. Fill in your qualifying life-changing event, attach proof of your current lower income, and submit it. This is the single fastest win for a recently retired household, and it is often the largest. Step 3. Call 2 offices and ask to be screened. The first is your state Medicaid office, where you ask specifically about Medicare savings programs. The second is your State Health Insurance Assistance Program, the SHIP office, which offers free, unbiased Medicare counseling in every state, and they will help you figure out which programs you qualify for without trying to sell you anything. Step 4. Apply for extra help directly through the Social Security Administration. You can do this online, over the phone at their national number, or in person at your local office. It is free, and there is never a charge to apply. If anyone asks you to pay a fee to file any of these applications, that is your signal to stop, because the real applications are always free through the official government office. Step 5. Call your county tax assessor or property appraiser office and ask 2 specific questions. First, what senior or homestead exemptions am I eligible for? Second, does this county or state offer a property tax deferral program for seniors? Write down the answers and, critically, write down the deadlines, because this is where people lose money purely on timing. In many Florida counties, the exemption deadline is March 1st. In Minnesota, the deferral application is due by November 1st for the following year. In Oregon, the deferral has its own annual window. Missing a filing deadline by 1 day can cost you an entire year of relief. So the moment you learn your deadline, put it on your calendar and treat it like a doctor's appointment you cannot skip. Now, one honest caution, because I would be a poor attorney if I did not give it to you. The figures I have shared today are current for 2026 and pulled from official government sources. But income limits, deadlines, and dollar amounts do change, and they vary by state and sometimes by county. So before you make a final financial decision based on any single number in this video, verify it with the official government office that runs that specific program, or sit down with a licensed professional who knows your personal situation. Use this video as your map, not as your final paperwork. The map tells you where the money is. The official office tells you the exact door to walk through. What I can promise you is that the doors are real, the money is real, and the only thing standing between you and it is the application you have not filed yet. And I want to name why this is so hard for good, capable people to do, because it is not about intelligence and it is not about laziness. It is about a lifetime of conditioning. Your generation was raised to not make a fuss, to not ask for help, to pay your own way and never take what you did not earn. Those are honorable values, and the system quietly exploits every one of them. It counts on your pride. It counts on your reluctance to bother anyone. It counts on you assuming that if you were owed something, surely somebody would have told you by now. That assumption is the myth in its purest form. Nobody is coming to tell you. The letter is not in the mail. The only person who is going to claim this money for you is the person watching this video right now. So let me give you something that makes the whole process easier. Because I know that 5 programs, 5 offices, 3 or 4 forms, and a fistful of deadlines is a lot to keep straight, I put together a free 1-page checklist that lays all of it out in plain language. It lists each program we covered today, the exact office or agency that runs it, the name of the form you need, the 2026 income figures to check yourself against, and a space to write in your own state's deadline so nothing slips past you. It is completely free. I am not collecting anything from you beyond letting you know where to grab it, and there is no product waiting on the other side of it. To get it, look in the description below this video for the link, or check the pinned comment at the top of the comment section. Download it, print it, and stick it on your refrigerator where you will actually see it. A checklist on the fridge beats good intentions in your head every single time.
And here is how I want you to use it, because a checklist you never open is just decoration. Pick one item. Just one. Do not try to do all 5 this week, because that is how people get overwhelmed and do nothing. If you retired recently, start with Form SSA 44. If money is tight month to month, start with the Medicare Savings Program call. If your property tax bill is the thing keeping you up at night, start with your county assessor. Knock down one domino this week, and something changes in your head. You stop being a person who believes the myth and become a person who has personally proven it wrong. The second one is always easier than the first, because the first one teaches you that the door actually opens when you push it. Now I'm going to ask you to do something, and I want you to hear the spirit in which I am asking it. Somewhere out there, right now, someone you know is quietly paying money they do not owe because they believe the exact myth we just tore apart. It might be your brother, it might be a neighbor down the street, it might be the woman you sit next to at church who mentions, a little too casually, that things have gotten tight. The system is betting that this information stays trapped in a few heads and never spreads. So prove the system wrong. Take this video and send it to one person who needs it. Not everyone. One person. That is how a myth actually dies. Not with a headline, but with one person telling another person, hey, this is not true, and here is what you can actually do about it. Because here is what I have learned in 15 years of doing this work. The families who keep their money are almost never the ones with the most money to begin with. They are the ones who refuse to accept that the number in front of them was the final number. They are the ones who ask the second question after being told no. They are the ones who filed the form everyone else assumed was not worth the trouble. That mindset is contagious, and it starts the second you decide the myth does not get to run your budget anymore. You are allowed to keep the money you were owed. Say that back to yourself. You are allowed to keep it. Nobody has to give you permission, and no clerk gets to talk you out of it. If this changed the way you see your own bills even a little, do me one favor before you go. Subscribe to this channel and tap the bell so you actually get notified when the next one goes up, because I dig into a new one of these overlooked programs every single week, and the next video may be the one that fits your exact situation. There is no algorithm looking out for you, but I am, and the bell is the only way you will know when the next piece of this puzzle drops. I am Emma Smith, and my whole job here is simple. I am going to keep telling you the things the system was quietly hoping you would never find out, one myth at a time, for as long as you keep showing up. Thank you for spending this time with me. Go knock down your first domino. I will see you in the next one.